Hi everyone, this is Skylar Buss, Client Service Associate at Zhang Financial. With the Inflation Reduction Act being signed into law by President Biden, the question of tax audits arise among listeners. So over the course of 2 different parts, we'll cover some tips on how to approach tax audits and walk through the important details of the Inflation Reduction Act. Here's part 1. Lynn, we have lots of questions from listeners about the newly passed the Inflation Reduction Act of 2022. Can you explain a little bit about the provisions in the act?
Absolutely, Skylar. As a matter of fact, Zhang Financial has been closely monitoring the progress of the bill, this entire process. If you can remember, there actually have been many versions, many discussions, and at one time, there are lots of provisions in the bill that would impact the taxpayers, certain group of taxpayers in a big way. But as we stand right now, on August 12th, 2022, the Inflation Reduction Act of 2022, that's the full name of the bill, passed both chambers of the Congress. Now, there is still some discussions on whether they would actually reduce inflation, but that's for another day. But it includes the following tax provisions. Actually, the final bill has only part of it is going to impact the individual taxpayers. The majority of it will impact the corporate taxpayers. For example, it includes a 15% corporate AMT, an excess tax on repurchase of corporate stock, extension on the limitation on excess business losses of non-corporate taxpayers. Now that will impact some taxpayers, individual taxpayers. And the last 2, one is a tax credit to incentivize investments in green technologies. And then the last one is the big one that would impact and got probably the most immediate exposure is the additional funds to the IRS to boost the tax enforcement.
I would think that one would be the one that would impact individuals the most, the additional funding of the IRS.
Yes, for sure. It's 80 billion, a B with a B, over the next decades. So one thing I can tell you for sure is the IRS will be on a hiring spree for sure.
So I would think for clients that really big burning question is whether that 80 billion increased funds will actually increase that IRS audit rate.
It for sure will, because the reason that they put in 80 billion is it is estimated that the 80 billion would generate about 200 billion in additional revenue. And some are arguing, it's an underestimate. The amount should be a lot more than 200 billion. But keep in mind, it's only of the 80 billion that IRS got, only actually about 46.5 billion is for the enforcement. The rest of it will be for the client services, and I am sure a lot of us agree they need to boost their client services big time. And one other side is the IRS Technology. And trust me, I have seen that, I've experienced that as a practitioner. So they needed some improvements in their technology.
No one likes to get audited. I would never want to get audited. Have you ever helped any of our clients who have been audited, or do you have any tips for our listeners that you can share?
Absolutely. I don't know whether you know or not. I know you know that in my previous life, I am actually a tax CPA. I'm still a tax CPA. Mm-hmm. But at one time, I was in the compliance department of a Fortune 500 company. And my job is to deal with audits all day long.
Oh my gosh.
I know, sounds like a fun job,
yeah, right?
But that's for more corporate audit. But I actually have helped quite a few clients go through the audit process. So to give you some ideas about the IRS audits, there's several types of the notices you're going to receive. So the first type of audit is actually most commonly seen. This is what happens when you receive a notice in the mail. So normally, as said on the notice, you would say, oh, you owed such and such big amount, and sometimes plus penalty and interest, and then give you some kind of explanations. So most people, upon receiving the notice, the first reaction is, oh my God, I'm getting audited. That's just so scary. I'm getting audited. Well, actually, I won't even call it an audit. So what happens is every time when you have a tax reporting, I take your W-2, for example, you would have one copy. As the employee, you will receive a copy, said employee copy. The employer, the issuer, of course, will have a issuer's copy. And then the third copy is actually being submitted to the IRS automatically. So I won't say automatically, transmitted to the IRS. So they receive it. And same as the 1099 packages from the brokerage firms. Every time you receive a dividend, an interest, or you sold some stock, it will be you receive a copy and the issuer receive a copy, and the third copy is transmitted by the issuer to the IRS. So then IRS has a system. At this point, no one is actually manually looking at your returns yet. No human eye look at your return. They match what they have on the record with what you report on your system. And if there is a discrepancy, you will receive that notice. So often what we have seen is, clients sold some stocks, and there's really sometimes some transactions, I won't get into too technical in the details here, but sometimes the sale proceeds and the cost is exactly the same. So sometimes people just say, oh, well, I don't need to report this. Well, you know what? On the IRS side, if they receive the reporting of the proceeds, but not necessarily the cost basis, then you receive these nasty notice. They want to treat the proceeds 100% taxable, which the number, the tax and the penalty interest can turn out to be quite scary. So I would think my suggestion to clients is, if you receive a 1099 package, for instance, it said reportable transactions or the amount has been reported to the IRS, then you need to fit that number somewhere on your return. Now, whether it's taxable or not, whether it bears tax consequences or not, it's a different question. But whether you should report it depends on if your 1099 says this amount has been reported to the IRS. Then the chances are you should report this number somewhere on your return. Otherwise, you're going to receive that nasty notice. Now, the last one, of course, is the least favorite one, the scary one, the full-on audit, the whole enchilada. So there are actually certain tricks and things that you can do to make sure that don't raise a red flag to get audited. And if you ever get audited, there are certain things you should follow, you should remember, so that to make this, you think will be a very unpleasant experience. And I won't tell anyone that's a pleasant experience, but to go a lot smoother. So we will cover that in our next podcast.
That's all for this episode of the Zhang Financial Podcast. If you have any lingering questions for Charles, Lynn, or the Zhang Financial team, please email us at podcast@zhanefinancial.com. It's also listed in our show notes. Stay tuned for part 2 on a more detailed look at the Inflation Reduction Act. Until then,